Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Stock Market Recap, and this is August 9th, 2025, and yes, summer is more than half over. But remember, folks, if you want to sit on this beach or in these chairs and watch the sunrise like Jimmy Buffett used to do, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market recap, the market's having a very good week, but volume is beginning to drop off a bit. And we are really not quite to the top that we were about 2 weeks ago. So we're going to look at that in a chart. Our weekly stock analysis video, well, we have new numbers on O'Reilly, and it's one of those stocks you got to have in your portfolio, folks. I'm telling you. Over the past 5 years, it was up when the market was down. There were two periods in there. 2022 when the market was down, and then this springtime when the market dropped about 20%. This stock was actually up both those times. And when the market is up, this stock is up more than the market. In fact, right now, it's up 2.5 times the S&P over the past 5 years. In our ETF video, we go over all 5 AI ETFs, which we are told we must have over the next 5 or more years, because AI is just in the beginning stages, or so we're told. As we look at each ETF on our computer program, which we do, we find that we have all of the best stocks from each ETF already in our portfolios. Folks, this is a win-win. In other words, remember our theory, which is almost 100% true, is that if you pick the best stocks out of any ETF, out of any mutual fund, out of any index, if you pick the top stocks, you will and let somebody else buy the bottom half of the stocks, and let's call them average. But if you have the above average stocks in your portfolio, let somebody else buy the below average stocks in that ETF or mutual fund or index, then you will just about 100% of the time outperform that ETF or that index. So, folks, we're going to see these 5 AI ETFs, and they're comprised of stocks that have a lot of AIs in there. We're even talking about Kathy Wood's ARC portfolios, which she's famous for, and we're going to see we already have those stocks. So you want to make sure you look at this ETF video. And let's look at the S&P right now, and the S&P is at 6,382. It's up 151 points on the week, which is about what it was down last week. And we can see right in here that we never did reach the peak that it did last week. Now, see this unit right in here, this line right in here. This is where the market opened, and this is where it closed. Right now, we're just right at this line here, trying to surpass this top right here and this top right here, and we'll see. And look at this indicator down here. This intermediate term indicator looks like it wants to start turning up once again. Oh my gosh, what a market, right, folks? And when we look at the S&P 500 again, over a longer time frame, we see that this intermediate term indicator has turned up. So we're looking at this closely, but with the market almost near where it was a couple of weeks ago, this is not nearly near this high of a couple of weeks ago. So if the market does turn down this coming week, we will see a divergence with this indicator making a lower high and the market making a higher high. The thing is, we have to get there first for this signal to form. So even though we've had such a great week this week, and they're talking about a market melt up, well, we're not back to where we were a couple of weeks ago. We're almost there, and I'm recording this before the market closes, so we may get there before the end of the day. And portfolio protection, well, we use SPYs for our portfolio protection, and this is about $150,000 portfolio. We have 3 SPY puts, about 12.5 to 15% below the market, and the SPY is up 16 points this week, which is a pretty good move for that, because you figure the SPY is 1/10 of the S&P, so the S&P is up about 160 points or so. It depends whether you're looking at the cash or the futures. So next week we'll probably be rolling this or letting this just fade away, and we'll be getting into the November puts. because we're coming into a period where the market starts to break a little bit, and then in September we see it go down, and it usually bottoms in October. So we want to be covered all the way out into November, and we'll do that next week, probably toward the end of the week. Buy more portfolio protection, just about 12-15% below the market. It's nice and cheap right now, just in case the market does something, because we are coming into a period of weakness. But don't forget, we have the Fed meeting in September, and the market is pricing in a rate cut in September. But the Fed may have other ideas, and so if the Fed doesn't agree with the market, we may see a pullback in there. So we just want to be protected, and then we don't have to worry about these little ups and downs all over the place. We're protected 12%, 15% below the market, so we have a drop. We're protected anywhere below that. It's just like a deductible on your car insurance. Now let's look at the QQQs. Well, the QQQs, 573. This is the NASDAQ 100, up 20 points this week. That's a big move for the QQQs. It really is. And we have the same three puts, but the QQQ puts, because the QQQ can be a little bit more volatile than the S&P 500. Sometimes it is, sometimes it isn't. But when it is, we just want to be prepared. And since we're starting to put more and more semiconductor stocks and AI type of stocks into the portfolios, because those are the stocks that are making money, then we want to be protected with some QQQ puts also. So, folks, we had another fantastic week, making up for last week, which is great. And last week we bounced off the bottom, and the S&P bounced off its 20-day moving average, so everything is looking good right now, and we should reach new highs this coming week, and then after that we'll just have to wait and see what happens. So remember, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett. It's the weekend. Go out, enjoy your family, be with your friends, maybe have Sunday dinner. Keep your mind off the market, because it'll be here starting Monday. And folks, we'll be back here in a couple of days.